most people aren't really having these conversations. Money itself is a pretty taboo subject. Like you can't really just openly talk about it in big social groups, or you're going to look like this crazy person, and everybody's going to start, avoiding you. So unfortunately,
But can we normalize it, please? Like, it
we're
doesn't have
trying.
to
We're
be
trying.
jokes, you know? Like,
We're working on it.
I love that.
Yeah, hey, the market hustle, helping you to succeed, teaching like nobody else. Financial empowerment, giving you strategies for generational wealth, so you can start helping yourself. More money for you to be getting. This the moment for you to be winning and be living financially independent.
Market Hustle community, welcome to episode 38. For those of you who are new, welcome. We got a special episode for you lined up today. For those of you who are returning, welcome back to another great episode. Thanks for joining in again. And if you're not aware, my name is Josh. I'm the guy behind the Market Hustle. We're really excited about this episode today. I got the full squad here with us. We got Pierce and Boffy, both co-hosts are here. And we do have a lovely guest, as promised in the last episode. And not only is this guest going to be able to share a lot of great actionable insights, but she's also an avid listener to this podcast. And something we are focusing on in 2025 is bringing more of our listeners onto the podcast to share your stories, share your experiences, because what better way to learn than from other people who are maybe kind of in a similar situation than you're at currently, or maybe just a little bit, couple of levels ahead of you, but still have some of those fresh insights of what they've learned to kind of share those with the rest of the community. So we're really excited about this kind of type of segment. That being said, let's introduce our co-host. Let's welcome them back. Let's start with Boffy. Boffy, how are things going in New Jersey?
Yeah, man, it's been a robust month, bro. Like 2025 came out the gate hustling and bustling and just 100 miles an hour, but it's been good. It's been a great month. Learned a lot, enjoying my new role. As we get close to the end of the month, I'm learning to kind of shut it down quite a bit. So very excited for this weekend. It's my fiance's birthday tomorrow, so happy early birthday to her. And yeah, feeling good, man. Feeling good, taking things easy, and really excited and pumped for this episode. Always good to have incredible people on, and we definitely got a special one today.
Completely agree, man. Well, welcome back and happy early birthday to your fiance, man. Pierce, how about you? How are things going in Southern California?
They're good, man. I mean, it's not too cold, not too hot. It's actually kind of cold right now. It's 56. So for the rest of the world that listens and 56 is not cold for you guys, I apologize. Other than that, man, I'm super excited. It's still light outside. This episode's going to be awesome.
Awesome stuff. Great to have you back as well, Pierce. Well, let's waste no more time. For a little bit of context, Reece, again, she is an avid listener to the podcast. She is also a student of Money Mastery, and that's actually how she got on the phone with me. And she shot her question of asking if she can come on the podcast. And again, kind of lined up perfectly because we're trying to have more people on this podcast from the community itself. So first off, I want to officially welcome you to the podcast, Reece. Thank you so much for taking the time to come on here, be willing to share your experiences so that the people who are listening to this can actually take some incredible lessons away. And based on our conversation, our phone call back a couple of months ago, it sounds like this is going to be a special one. So Reece, thank you again for coming on. How are you? How's everything going? And you're also in Southern California, right?
Yes, thank you, Josh. Thanks, guys, for having me. Yeah, I'm in LA, San Pedro. So pleased to be here. Super excited for this conversation. Honestly, I've really been looking forward to it. And as Josh said, I invited myself onto the podcast and I shamelessly put in a plug and he let me on. So I really can't wait to just like have this conversation. I've been listening to the podcast for about a year now, following you guys for about a year now. And I have learned so much. So thank you for having me.
Of course, the honor's ours. Reece, I'm curious though, what's like been your favorite episode? Like if you had to pick one episode that really stood out to you.
Okay, so I have poor memory, but I can't tell you why, but I know it was one of the really early episodes. There was a gentleman who was like a fitness instructor.
Mm,
Um, he just had like these quotes
Paul.
and like Paul, like
Mhm.
there was like moments where he was like, just he like really crystallized like the way money works and how it sort of was an analogy to a lot of different areas in his life. And I was like, yes, yes. I just found myself saying yes, like affirming him at everything he said. And that one I've gone back and listened to a couple of times.
That's awesome. That's incredible. For those of you who are listening, that is episode 4, and that was with our lovely guest, Paul. He's actually a fitness coach, and he was able to kind of breach or bridge some of the correlations between investing and fitness. And that was a really cool episode, just kind of hearing his backstory, as well as helping or having him kind of come in and share the correlations, because there are a lot of similar insights or mindsets that mindset shifts that you have to have when it comes to finance, and that also apply to fitness. So that was a really fun episode.
Yeah,
But
I
Reece, yeah,
think
oh, go
I
ahead,
think the
Buffy.
beautiful thing is it really it is cross-functional, right? Like all the topics and things that's covered, it doesn't just apply to your money, it applies to your fitness, your health, right? Nutrition, just a whole bunch of different things. But Reese, just a quick question before Josh continues. What are some of the takeaways from that episode 4 that really stuck with you and you've implemented and you've seen, some progress?
Well, I can't say I've implemented it in my fitness because I'm on a fitness journey right now. I am newly postpartum, like 6, 7 months.
Ah,
um,
congrats on the
Thank
baby.
you. Yes. But it really stuck with me when Paul was like, it's compounding. It's compounding like everything else that you do in your life. It's not going to be the 9-hour workout one day, the 2-hour workout next week, etc. that like makes you see a shift in your body or your health, anything. It's the 30-minute consistent workout every single day that you don't even think about, you just get done, is what makes you actually have progress. And then eventually those effects start compounding a year or 2 years down the line, and you see your body composition really kind of transform. And that's been my philosophy for investing. It is way harder to implement in fitness, but I'm still trying.
That's incredible. And of course, the audience of the Market Hustle podcast, we are all eager investors, trying to increase or build our wealth and build just better money habits in general. And the one thing you'll find out is, like, of course, consistency is the key. It's the name of the game when it comes to building a better financial future for yourself, whether it's just being consistent with investing, maybe it's like $50 a week, just throwing it into the stock markets, or just saving. Like if you're saving up for a trip or you want to save up to start your own business, maybe throw in, a couple $100 in the high yield savings accounts. Just being consistent with it is really the name of the game when it comes to finance, but then of course also in fitness. And the cool thing, one of our future goals with this podcast as well is to have people, from other domains of life, whether it is fitness or maybe more entrepreneurs, kind of come in and, help bridge the gap between how we can apply what we learn in the investing world to other domains or skill levels, if you will, whether it's fitness or whatever else people want to learn. I know we have, I know a lot of you who are listen to this at the gym, while you're working out. So maybe we should have some more fitness experts, on into the future, just kind of help with that. But great stuff. So Reece, let's just go ahead and dive into it. You have quite the backstory. So maybe if you want to just kind of share some of your, how you got started or how you got interested in improving your financial habits and money habits in general, as well as maybe just kind of your background or your experience with some of the difficulties you faced when you started this journey.
Oh yeah, how far do we go back before I was born? I guess it is important, I think, from my perspective, to say that I'm a child of immigrants, because I think it brings a very different financial lens on what wealth building is. If that's even part of a conversation, a lot of immigrant families that I have known, been a part of, spent a lot of time with, aren't really having the wealth conversation. They're having the income survival conversation. And so like there's quite a large gap between those two. And we'll leave that aside, but that's the context in which I think I've started my financial journey. I started investing when I was 18. So
Nice.
yeah, it was not because I knew what I was doing. Long story short, I hurt myself as a kid. My parents sued and we won. And I got pretty large checks from the age 18, 19, 20, and 21 that were then paid out to me when I became of age. And the first thing my dad did was take me to Charles Schwab. He's like, immediately check and going to Charles Schwab. We sat down with an advisor. I had no idea what Charles Schwab was. What are we doing here? What is an index fund? Sure, I'm trusting this man behind a desk and my father to have my best interest. And so all that money went into mutual funds. For some of it, we carved out. We bought a few little plots of land to see how they might pan out in California. And so I've held on to these assets, but honestly, I totally blew it. And I don't know if I'm allowed to like cuss on this podcast, but
Go for it.
I
Yeah.
completely fucking blew it. Like I had so much money. Like just to crystallize this for us, it was 80K that I had from the age 18 to 20, 22.
Wow.
And I completely squandered it. And it hurts me to go back and think about it because even when I had helpful steps and guidance along the way, my dad understood the stock market, but didn't have like financial, I would say, rigor or education to the depth that we talk about here for me to really know what was happening with the money or for him to really know what was happening with the money. He just knew go to the stock market, start investing, it'll compound. But he's a day trader, and I would argue maybe not the most successful day trader. But that, mentality was there. And so when Facebook IPO'd, we bought. And then I panicked and I sold at a loss. When Snapchat IPO'd, I bought and then I panicked and sold at a loss. And I was like, I don't know what the fuck I'm doing, guys. Like, I keep losing money in the stock market thing. Like, what is happening? And so at some point, I got frustrated and I was like, Dad, you handle my money. I don't know what I'm doing. And he kind of like held on to Snapchat, for a little while. And then for a second, it looked like they were coming back, like they died out for a while. I don't know what they are with Gen Z now, but they died out for a while. They came back. And then like Kylie Jenner put out one tweet being like, does anyone even use Snapchat anymore? And
I
it
remember
plummeted
that.
again. Like it completely crashed again. And I lost all my money all over again. So my first experience in the stock market was like, no, pull out. I'm done. Like I got frustrated enough where I took whatever I had left and just put it in my pocket. And at that point, it was like 10K, like less than that. I was lucky that I bought a few pieces of land that I still hold on to, but a good chunk of the money was gone just because of poor decision making. And I just, I think about, man, what could that have been if I had just put it away and not touched it, left it alone?
Reece, quick
Yeah,
question. Well, first off, thank you so much for sharing this. I'm sure
totally.
we all have some sort of similar story to our like our beginning investing journey.
Yes.
We just kind of jump in, we're like, oh yeah, this is a business that maybe will go up in the future, and you kind of buy it, and then inevitably, the market does its thing and it's going to have one of its down days, or the red market kind of hits. And then if you don't know what you're owning, it's very easy just to kind of panic and rush for that sell button.
Right.
Because of course, nobody wants to lose money when they're in the stock market, right? We're all going into the stock market because we want to make money and to grow our wealth. But I'm kind of curious, just like in the early journey, if we can kind of zoom
Yeah.
in a little bit, were you aware of index funds at that time? Like, was your father aware of index funds at that time?
Yes.
And if you were,
Yeah.
okay, what did
Yeah.
he kind of like? What was kind of his philosophy around it? I'm just curious.
He didn't have a philosophy. It was based on the advice of the man that worked at Charles Schwab. He was like, his advice was everything that we talk about here. Put it in an index fund, forget about it, move on. Like that was it. And he's like, you're going to buy a little piece of every single company and it's a nice little safety net for you. Forget about it. Don't look at it. And we did that. And that was the chunk of change that I was able to pull back and out of. It was all the money where I thought I knew better. I'm like, ooh, Facebook, I know what that is. IPO'd, let me go buy some of it. I believe in them, like it, like half the logic was there. So I would say that like neither my father nor I were very good at understanding like market trends. I mean, who can really say they truly understand market? The market is irrational and it will remain irrational longer than you can stay solvent. So it's
Sure.
that was my experience. And so it was a bummer because it's like I was told the right thing and I understood what it was, and yet emotion took over and I did otherwise.
Yeah, I think that's a big key word right there, the emotions, right? Because
Hmm.
I mean, mistakes will happen, and sometimes they are hard lessons, even if you've been introduced to the right information or to the market early on in life. And so sometimes it will happen that way because the emotional piece can't just be taught by just an advisor telling you something. It has to be kind of lived. You have to experience it to fully understand it. It's like when you're trying
Absolutely.
to, when somebody's like, oh, well, this is so easy and simple. You can just do X, Y, and Z. But in reality, it's like, dude, if you was in my shoes and you can understand how it actually is when you're experiencing it, you might have a different take on it. And I like the fact that one, your father introduced you to a financial advisor. Actually, one is the fact that he had resources available for you when you was old enough to start learning and getting a little bit more tangible experience with it, right? And then secondly, he introduced you to a financial advisor that helped you kind of shape your mindset and blueprint, at least from the start, right? because it
Yeah.
could have been a lot different if you didn't have that. If you didn't have any financial advisor at all, you could have blown all 80. You know what I mean? Right? Anything could have
That's
happened.
true.
So, but I think, and how was my question really here now is, how was your experience working with that financial advisor and the mutual funds that was recommended for you? Like over time, was it going up? And then what made you decide, hey, I'm going to pull it because I like
Yeah.
Facebook?
It w- Honestly, I think that's where we went wrong. There wasn't really anything explained to me at all. It was more of an information asymmetric relationship where kind of like when you go to a doctor, you're like, I don't know, the doctor knows. I'm going to believe what they tell me is wrong with me. Like it was very much that type of relationship where you're the expert, I know nothing. You're telling me to invest in Vanguard and I can't even remember the other one, what it was called, whatever. And I took you at face value for that, and did what you said. And as I got a little older, got a little cockier, right? Like early 20s, I think is like peak cockiness in general, and I was like, okay, well, I kind of understand this thing now. Why don't I like play around with it a little bit, see if I can get rich quick, overnight. We know Facebook's gonna be really, really worth something. It should happen in the next year, whatever. And when that didn't happen and they tanked to half their stock price, I freaked out and sold. I think the problem was really actually exactly what you said, Boffy. It's like being told the advice and hearing it isn't good enough. It needs to go a deeper level than that. I should have done my own research at that age instead of sort of letting people manage me. And I just didn't know better, really. But now I do.
There you go. Well said, man. I think there's a good lesson there as well. Probably more so for financial advisors in this case, or anybody that always recommends something good, right? That can help somebody. This goes for us as well. Me, Josh, and Pierce. Everything we do online and on this podcast is really important to make sure that we're not simply just telling somebody, "Hey, just do this and you're fine," right?
Yeah,
Yeah, it might be that simple, but humans are creatures. We're complex. We have way more moving parts than we might think. So it is important to spend a little bit of extra time and invest further into your audience education, right? Just kind of being able to take them through experiments or actual examples, and then over time being able to continue teaching them, and it's almost like a therapy session, right? It's like,
completely.
yeah,
Yeah,
things are great now, but hey, what do I do now, right? Market is down, things are happening, things are changing. So I think it really is important for anybody that's online, or if you're in an audience enjoying this podcast episode and you have family and friends that you're like, hey, you should listen to this podcast. Don't just tell them, just go listen to the podcast and just do what they say, right? Tell them the things that you gain from the podcast that's helping you. Like Reece mentioned earlier, episode 4, fitness, compound. And now look, it connected all the way to the money. She shot her shot. If you don't ask, you would never get. So she shot her shot. Now she's on here with us, right? Tell the stories or the real things you're taking away from the podcast that you're benefiting from. Because ultimately, what's going to get them to listen or actually take the steps and continue learning is if you can show them what they're gaining, not just tangibly and financially, but how it actually helps them set up their life and have the right guardrails, but also be able to enjoy way more beyond just the money.
totally. Couldn't agree
So
more.
So, Reese, I got introduced to a financial advisor when I was a little bit younger as well. And one of the things that I had to do, like you said, was I had to start learning. And right now, I feel like I'm at the point to where I can self-manage some of it, but not all of it. And I'm curious, what point in your life, if you still use a financial advisor, did you grow some knowledge to be able to
Mhm.
self-manage it yourself?
Um, I I pulled out of Charles Schwab. I was out of the stock market for like, let's say 5 years. And then there's a whole other thing we can talk about, but I joined a women's group called Ladies Get Paid, where they help you negotiate. And for any women out there listening, go to their website. You will get a pay raise by following their steps. I did, and it was incredible. Um, but they had conferences that I went to, and at one of their conferences, Elvest and Wealthfront and Betterment were all there. And one of the key messages all three of them said was, you are wasting your money on a financial advisor. A robo advisor outperforms a financial advisor for a fraction of the cost. If you don't believe us, try. And this just like blew my mind because for the longest time, the entire financial industry has guardrails. If you're not smart enough to be a part of it, you wouldn't possibly understand the complexity of how to do this, yada, yada, yada. And then they're like, no, 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 no. Actually, let me show you data that tells you that human error is costing you way more money than their fee. So start using robo advisors, set it and forget it and move on. And I was like, what are you talking about? That's when I started self-managing. I went to Wealthfront and started poking around, put a shit ton of money in high yield savings account, moved all my money in there with them, did the risk assessment, and I was like, okay, I'm at a tolerance of a level 8-ish. So, and it just showed me like, okay, do you want to diversify this way? And I was like, yeah, I don't know what that is, but let's try. I dug in a little bit more, and it has provided me, I think, like a 30% return over the time that I've been with it. Like, it is wild. I never saw anything like that before. I don't have to talk to anybody. All I got to do is log into my app. I love it. It's been fantastic.
That's awesome. We've also had a segment on the podcast about the advisors of, flat fees versus percent over dates.
Yes.
And
Yeah.
it's just doing the math of like 1% over 40 years of having your money
A lot
invested.
of money.
It's astronomical. So, I mean, that's a really good tip. I mean, so what did you say it was called? Wealthfront?
Wealthfront. Yeah, Betterment, Ellevest. Ellevest is mainly geared at women, but like they're all the same, Wealthfront, I've been very pleased with the user interface. That's actually what got me in with them. They make it so easy to understand how much money you have, how much you need to put in, how to get your goals, when you can retire, etc. It's just a really fantastic UI experience.
Awesome. That's a great tip. Thank you.
Yeah.
How long? I'm curious. So, how long have you been? So, you said you've earned 30% since you've started. How
Yeah.
long have you been with the platform?
I've been with them since 2017 or 18.
Okay,
Yeah, one of those years.
gotcha. So, is that 30% like per year or just 30%
Yeah,
total?
total. Like it's
Okay.
all time. Yeah. It's
So,
gone up and down. There were years where I was like I saw like 54% or something my first year was crazy. That another year dropped down to like 13%. It's kind of like evened out, over time. But overall, very much happy with it. Like it's gone further than I could have done anything on my own.
that's awesome. So it sounds like you're pretty diversified. And if you're comfortable, I don't know if you're
Yeah,
not comfortable
go for it.
going on this.
Yeah.
Okay, cool. So it sounds like it's a fairly diversified portfolio, given that it's roughly 30% return, over
Yep.
the last 5+ years.
Yeah.
Was that like intentional to like have a safer slash diversified portfolio? Is that kind of how you set it up for? Just
Yes.
for reference, because like the S&P 500 is up a little, like close to I'd say probably within that same timeline, like
Yeah.
at least 100%. So like I'm curious to like just get the context around.
Yeah. I can tell you right now, actually, I can pull up the
Awesome.
app and tell you exactly how I'm diversified.
Awesome.
So in my individual investment account, I've got 35% in US stocks, 30% in foreign development stocks, 19% in dividend growth stocks, and 16% in emerging market stocks. So pretty diversified and pretty global, I would say.
Gotcha. That makes sense. Yeah,
Yeah,
I mean it's definitely a like a full weather portfolio, I would say, because
totally.
you're kind of getting a little bit of everything. And it's important to call out because some people might have a higher risk tolerance where maybe they want to fully concentrate in more of like the US stocks, which historically have returned, more of the higher growth side of investments. But, of course, when you're building out your retirement funds and you're trying to get more aggressive with it, like sometimes it might be better to build out more of a conservative portfolio
Yeah.
or diversify further just so you can build that confidence of staying consistent with it. So, like, of course,
Yeah.
it sounds like this portfolio works for Reece specifically. But Reece, I'm also curious, is there anything like you're considering shifting with this portfolio, or is this something that you are like, dead set on, like, this is my portfolio, it works well, it's growing in the right direction of how I want it to grow in? I'd love to
Yeah.
get insight around that too.
I mean, my money philosophy is very much the tortoise and the hare story, right? Like, you've got, it's an old tale. My dad used to tell me that a lot when I was a kid. I am the tortoise. I am not in a rush. I am slow, steady, honestly, set it and forget it. So, like, I have no intention of changing anything. So, it's funny because, like, my risk tolerance, it depends on what we're talking about. I quit my job to be able to start a business. But the only reason I was able to do that was because I have a 403b, a 401k, I have a Roth IRA, I have money in my account, right? So like, and I have a very steady um investment account that has done well for me. And so like I wouldn't be able to take these types of risks in my life if I didn't feel like I had safety net after safety net after safety net behind me. You know, like I've got options. This business won't ruin me if it fails, right? And so to me, it's like I'm not going to change something that's good. It's working for me. I
Hmm.
could make a lot more money if I dove deep, right? In figuring out maybe I'll dabble a little in crypto, maybe I'll do, you know, here and there, put 5% there. But I have found, because I know that we talk holistically about wealth here, I have found that my anxiety peaks when I start getting into that kind of a game. And
Hmm.
it goes right back to like where I was at 18. I'm like, I actually still don't know what I'm doing. You know, why mess with this? Leave it alone. Like set it and forget it. Let your money come. Like I have it set to $500 a week into my investment portfolio. I don't care what the news says. I don't look at it. Once it's in that account, it doesn't exist to me anymore, and it's working. And so that's not, you know, that's not the going to be the end all be all for everybody. It works because of the way that I've set up my life. Like I have a business I'm running that's making money, but I'm not pulling a salary. So because of that, I need this to be as is. I can't touch it, right? That's not everybody's story. So it's not necessarily that like this is the way to go. It's what's working for me as a foundation.
That's a great explanation. I'm glad you highlighted that. And I think I want to, touch on that a little bit more because Reese just shared exactly the portfolio that works for her, right? For her personality, for her MO, for her goals, and for how much she wants to, whether it be hands on or hands off. Clearly, in this case, completely hands off because she's busy with other things in life, right? Other areas of her life. And so when you're investing, it is important to make sure you take inventory of who you are as a person, who you are emotionally. Take inventory, understand the level of knowledge you have of the stock market, and make sure that you understand the major shifts and pieces in your day-to-day life, your family life, things you're responsible for, not just financially, but with your time and your energy and your commitments, right? Because all those things should be factored into how you build your portfolio. It shouldn't just be, oh yeah, I want to make money. So boom, I just want to get paid dividends. So whatever, I load up in dividends. Or I want to trade stocks and you don't have the time to actually spend on charts, on the news, on what's happening all the time, right? So I think that's a really important starting point that everybody can reflect on, even if you don't know how to invest in the market or you don't have the education that you feel like you need in order to invest, right? You can start investing in, auditing yourself as a person, how your relationship is with money and other things you got going on. But I'm just curious. So I know it's set it and forget it. So this allocation for your portfolio was basically set up by the robo advisor, like
Mhm.
or you kind
Yeah.
of okay. And
Yeah.
does it take into consideration like a checklist or questionnaire that you fill out based on,
Yes.
Oh, okay, nice, nice.
Yes,
Okay,
the very
awesome.
first thing Wealthfront had me do was fill out a
Mm-hmm.
questionnaire. It wasn't that long. I think it was like 15, 20 minutes, but it went pretty in depth to understand my emotional volatility. Like, what are you actually comfortable with? So it wasn't like questions
Mm-hmm.
all about money. It was trying to understand me and my
Nice.
behavior. And I think that's the core of what they've got down really well because I haven't had to like had a look. I haven't had any anxiety with it whatsoever. I answered them truthfully. It provided a portfolio that went right.
Right. That's awesome. That's interesting because I can tell the breakdown of the allocation there is designed to fit you, you know.
Yeah.
I'm just curious, does it in terms of because I know it's like 35% US stocks, 30% on foreign, 19 in dividends, 16 in emerging market. Does it give you like a summary of what each, section kind of really is
Hmm.
and
Let's see.
represents or gives you a little bit of insight about it?
It probably does beyond the app. Let me check right here cuz like I mean it'll tell me
Mm-hmm.
what my individual investment account like how it's doing um on its own. So it'll tell me my time weighted return, annualized return, year to date return, etc. And then I've got a breakdown of like I'm invested in Vanguard, iShares Core S&P and Schwab for the US ones, right? And it'll show me sort of like what's happening with each of those. What I do like is it kind of pops up with little things that I'm learning through the app. Like it's like tax loss harvesting alternative. Like, do you want to look at this instead and like swap these two out? And I haven't spent the time to go that deep yet, but it does have like that educational element to it. Yeah.
I love that. I
Yeah,
love
it's
that.
a
That's
really
big
great app.
because, yeah, it's important because again, things happen, things shift, and so the fact that it's intuitive, it gives you the bits that you can digest, things that makes it not so complicated and like,
Yeah.
deep dive in that like dark web of investing and all the craziness, and it keeps it simple and smooth for you. I love that, and I
Yeah.
think it's important that I hope everybody that's investing or listening to this podcast you're looking to invest, you find something or a platform or a brokerage that don't just help you invest your money, but teaches you and educate you so you can continue benefiting from the tools that we all have. But I got a quick question because going from 80K to 10K definitely must have had some psychological impact, right? And
Yeah.
trust me, Josh, I've lost money. I've lost money. So,
Mm.
everybody that has invested before, I've probably lost money at one point or the other. Now, for many people, it can be crippling, right? In terms of they never even want to invest again because they're so fearful of that experience, right? So someone out there might be listening right now, might have lost a lot of money as well, especially over the last few years because there's been a lot of up and downs, and whether it's crypto, meme stocks, and so maybe it's been very difficult for people to continue. So somebody might be listening and kind of reflecting or in that stage of fear.
Hmm.
So I'm sure it was hard to gain confidence and trust the tools, the system, and trust that hey, I've educated myself, and so I can do it myself now. Actually, right?
Yeah.
What are some of the things that you did, or how did you manage to go from that hump or that humbling experience to
Yeah.
being able to put yourself back out there again and trust the system?
Yeah. Um, Few things come to mind. One is I didn't jump back in. I dipped my toe in the water. I got my Wealthfront account and I was like, you get 500 bucks, like let's just see how this goes. This
Let's build some
robo-advisor
trust.
thing. It was like a mythical creature at that point to me. I was like, what the hell are they talking about? And so I just allowed it to kind of prove itself to me over time. That was one thing that I did. And I was like, wow, my 500 just turned into 8. Like, let me give it 1,000. And I did that over time. And that started making, allayed my fears, within a year or so of playing with it. The other thing I think is I started talking about money a lot. And I started surrounding myself with people that talked about money a lot. And one mainly was the Ladies Get Paid group that I had joined. The co-founders are absolutely fantastic. Honestly, you should have them on the podcast. They're really fantastic speakers. And it was just about surrounding myself with other people that were talking about what they tried, how they asked for a raise, what's a high yield savings account. I didn't know what that was. Other women were showing me that. I had this irrational fear of moving my money out of JP Morgan Chase to a high yield savings account. And I was like, I don't, what are these high yield savings account? Are they real? Like, is it insured? Like, what if I lose my money? Why is HSBC offshore? Like I had all these questions. And it just felt very like mystical to me. And so it took a long time to sort of debunk the myths, I think, just by engaging with people, engaging with the products themselves, and kind of proving that, like, no, they're not here to snatch your money away. They're real products. They exist. Most people don't use a high yield savings account because they don't know what that is, not because there's something necessarily wrong with it or, special about it. So yeah, I think that was really what worked for me. This combination of testing and actually surrounding myself with people that are doing the same thing.
Love that. I think that's great. So hopefully everybody's taking notes. One, if you've been in a similar situation, start small, right? Start small. It's one step at a time. Dip your feet in the water, build some trust over time. And then secondly, have a community of like-minded folks on a similar journey. And I think that's one of the beautiful things that we do here on this podcast is to kind of help curate and create that safe environment for people that have been through the entire spectrum of experiences related to finance, just life, things all around in general, because you cannot do it all by yourself, right? Like you need
True.
literally an army to conquer anything and make progress. So know that you don't have to do it all by yourself. You're not alone. You have us, you have other people in this community online as well that are more than happy to share information that will benefit you.
Yeah, I love that. And I think it also shows the importance of being willing to learn from other perspectives, because especially when it comes to money, it's very easy to just think you have it all figured out, or to like build your own little silo and, everybody else has it wrong. Like, I have this strategy, it works perfectly. I understand money the best. Like, I know how to budget, like I'm great. And then next thing you know, like maybe you're not as far along as you wished, all just due to, the human ego kind of keeping yourself back because you don't want to get out of your comfort zone and potentially learn from other people or other strategies or other perspectives. So I think, Reece, you highlight this well, is that, you took the time to, like, of course, like maybe you got burned by the markets in the past, but you didn't let that stop you completely. Like, you were still eager to learn from, I love that you joined a community, like a group. Like, having that group setting is so powerful, because you're just naturally going to be surrounded by people who have different perspectives, and they're sharing their perspectives with one another. And you're going to be able to take, little bits and pieces that kind of fit into your life and try out those strategies in a way that can kind of benefit yourself, such as what you've exactly done. So I think it's great, as well as, kind of highlighting the starting small, just staying consistent and actually dipping your toes in the water is really half the battle. And,
Yeah.
I understand, because money itself can be a pretty touchy subject, especially when we spend a lot of effort and time to make money. The last thing you want to do is risk it or give it to somebody or to some bank, and then it all disappears, right? Like, nobody wants to have their money vanish or disappear or get scammed. The financial world in general can be pretty damn intimidating if you've never taken the time to learn about anything money related. And unfortunately, there's quite a bit of people who have no financial education whatsoever. I mean, this stuff isn't really talked about in the school system. It's not really talked about in families that often. I mean, in some families it is, but generally speaking, most people aren't really having these conversations. Money itself is a pretty taboo subject. Like, you can't really just openly talk about it in big social groups, or you're going to look like this crazy person and everybody's going to start, avoiding you. So
But
unfortunately, you
I
have
was
a
gonna
comment,
say,
Reece?
I was just gonna say, but can we normalize it, please? Like, it
We're
doesn't have
trying.
to
We're
be
trying.
joked, you know? Like, I
We're
am
working on it.
I love that. No, honestly, that's one of the reasons I'm like so attached to this podcast, is because like I am so tired of it being a taboo subject.
Right.
Why? Like
Right.
some of the best advice that I got when I was going for a pay raise was, have you asked 6 white men what they're making in the same position? And like I would, the thought of like going to them and asking what their salary was, like, freaked me out. And then I was like, okay, why don't I just ask for a range, And it was eye-opening. It blew my mind. Like, I have a women's group, just like some of my best friends. We call it Meeting of the Minds. We get together every month and we talk about money. We talk about careers. And you know what happened over a year? We all quit our jobs. We all got higher paying jobs just by talking about it within that 12 months. Like, it, if there's one thing I can tell listeners, please, please, please start talking about money. It doesn't have to be taboo. It doesn't have to be uncomfortable. Usually the vulnerability breaks if you offer your information first. So if you're comfortable talking about your numbers and your financial situation, other people will start talking about theirs. And like, that is a starting point. Just start there.
So, Reece, I have a quick question. You said you quit your 9 to 5 and you started your own business.
Yes.
It's huge. I mean, if you go anywhere on social media, everyone's an entrepreneur, everyone's a
Mhm.
CEO, everyone's a this and a that.
Yeah.
What steps did you take to actually be successful in that venture? And if you don't mind me asking, what
Yeah.
venture is it?
Yeah. So I own a sandwich shop.
Okay.
It is a tiny little sandwich shop in San Pedro. It's called Chachi's San Pedro, if you want to find us on Instagram. I am super proud of what we built. It's going to be a year next weekend. We have we have a couple 100,000 in revenue, and we have over 135-star reviews. And so
Nice.
like I'm like, hell yeah, like we went for it. So my husband and I started the business together.
Okay.
And how I got here, so I basically had a career as an advisor, as a consultant. My career kind of bounced around between nonprofit, for profit. But I would say the common thread was innovation. So my background is innovation, and whether I was working to um, do something with food security, I worked at AARP Foundation for a while. I bounced to Accenture. I was with a design firm that got acquired with Accenture, but I worked on like JPMC, a lot of Citibank, a lot of financial institutions. So there was a lot of preparation for me to get to entrepreneurship through consulting, I would say. If anyone's thinking about entrepreneurship, I honestly recommend to a lot of people, like young kids that come to me, they're like, I don't know what I want to do. I'm like, go be a consultant for 2 years, grind it out. It's not a great job. It's not pretty. It will shape you in a way where you can kind of do almost anything you want next. So that was my background. And the truth is I burnt out. I was tired. Like 2023, I had been a consultant for almost 10 years. I couldn't do it anymore. I was exhausted. I honestly hated getting on Zoom all day. And what became really clear to me was, yeah, I can stick around and climb the corporate ladder. I'm getting promoted. I'm doing fine. I wasn't like a raging success or anything. I wasn't, like the superstar on the team, but I was consistently promoted throughout my career on like what, like a 1.5, 2 year basis. That's usually the conveyor belt they look for. So I could have stayed on that and I could have kept making a lot of money. But what I found was the more that happened, the more I got promoted, the less control I had over my day, the more responsibility I had, and the raise was incremental. It wasn't exponential. And so I was like, this doesn't look appealing to me. I don't want to get to the C-suite because like, sure, I'll make a lot of money at the C-suite and have no time to spend it or enjoy it. I'll never see my kids. Like, I saw my directors, they were juggling who's going to handle their kid because one had to be in Miami for a week and another had to be in San Francisco. So grandma's flying in to take care of the kids. I was like, this is crazy. This is like the way you're living is chaos. And so I wasn't interested in that. I burnt out and I like honestly had a breakdown one day and I looked at my husband and I was like, do we have enough money for me to quit? Can I just do it, please? And so he was like, yeah, I don't care. Quit. It'll be fine.
Love it.
Yeah. He was like, do whatever you gotta do. So I quit and I didn't have a plan. I didn't know we were gonna
Wow.
open a sandwich shop. Um then I got pregnant a month later, so I didn't get maternity leave either. But I thought I was going to open a bathhouse. I have like a full product line and other business plan for a bathhouse that I want to eventually launch. The circumstances didn't work out that way. Like I kind of took the opportunities that presented themselves to me. I thought I was going to open a cafe. We live in San Pedro. I love this town, but it needs some more amenities. It's like kind of up and coming. And there's a lot of, it's a blank canvas. There's a lot of opportunity for good food. And we live 2 doors down from Chachi's, and it happened to be a fully up to code kitchen sitting there as storage. And my sister-in-law was like, hey, I know you haven't had any luck finding a cafe yet. Why don't you go 2 doors down and look at this like deli counter inside of this market? And I went in and I was like, oh my God, it's perfect. I guess we should try sandwiches since it used to be a sandwich shop before and like the neighborhood really wants it. Um, and like literally brokered a deal with the landlord on the spot. I was like, what can you do for me? Like, I want the space. You're not using it. I can bring in more money for you on top of rent, blah, blah, blah. And so my husband is a self-taught amateur chef. He knew off the bat, like what type of menu he wanted. He's like, I already got a lineup ready to go. And all I had to do was make sure that it was still up to code, and it was. So we bypassed the whole like 2 year permitting process that the LA County takes forever on. And we were in business in 2 months. So it
Wow, that's
was
incredible.
great. We got
Amazing.
lucky, lucky, lucky. We got very lucky.
All right, Reece, what's the best sandwich at Chachi's?
Ooh, that's such a hard question because see, listen, here's the thing. We only have 7 sandwiches. So we have a very specifically curated menu. The fan favorite, torpedo. We're in a town where there's like a large Italian population and it's a very like meat and potatoes type of town. So it's not surprising that the torpedo is the favorite. Um, if you would like to see our menu, you can go to eatchachis.com or find us on Instagram.
I love it. If I'm ever in the
Yep.
area, if I'm ever out in California,
Please.
I will
Oh
stop by.
man.
It sounds like a good place.
Yeah, nah, that sounds really cool, man. Reese, you might call it luck, but I like to say that you make your own luck by just taking steps, right?
That's
Even if it
fair.
might take some time to get to um, the reward, so to speak. But it all starts with one step. And for me now, I feel like I got a really cool Tycoon Travels opportunity because I need to now go pay a visit in Cali because I might as well check on Piers while I'm out there and we can go grab some sandwiches because
Yes,
food is
honey.
my
Do
love
it.
language. I light up like it's the 4th of July when anybody talk about food. I mean, if somebody's gonna kill me, they're gonna poison me with food. I know. I will not even think twice, you know.
This looks
But it's
insane.
interesting you brought up your husband as well. Oh, that looks good. That looks good.
Those are,
I know
yeah, those
anybody
are
that's
some of
just
our big
listening,
ones.
you can't see. You can't see.
See,
Pierce is showing us the
you gotta
sandwich, and that thing looks
go.
serious, man. I'm about to quit my job
Sorry,
today.
sorry. Go on, go on.
But yeah, I'm glad you brought up your husband and how you had a conversation and you guys
Yeah.
seem to be aligned. We recently just had an episode on relationships and just partnerships along with money as well. So it's really cool to kind of see the importance of having a team and a partner that
Oh
you can
yeah.
align on priorities together and kind of, really, put your forces together and go at it.
Yeah.
And I think that's really cool. So it
Yeah.
sounds like you got a lot of training and education from your consultation jobs and opportunities. And one of the things I took from that as I was listening was everything really serves a purpose, right? Even some not so pleasant experiences can work in your favor in long run, believe it or not. So kind of always have an open mind a little bit there. And then priorities
Yeah.
might change over time. So remain flexible. Like you
Yeah.
said, you got to start thinking about family planning a little bit more, spending time with family and friends, or when you have kids, you want to have that opportunity to be there, especially those critical beginning stages that you don't want to skip a beat. So I think it's really, really awesome that you shared.
Thank
You
you.
gave us a nice segment into a little bit into your life and some of the vulnerable states there. That's really
Mm.
awesome.
Yeah, just to drive that home, Buffy, two quick things. One, if you have any doubt around consulting as a good foundation for your career, not to really sell consulting, because I don't personally like consultants, to be honest, but like I couldn't design a PowerPoint when I started, and now I do all the branding and marketing. Everything that you see for Chachi's, I have hand designed. So like that itself speaks volumes, I'd say. And two, you've hit it on the head. Like picking the right partner, guys, is the biggest financial decision you are ever going to make. Like, I am so incredibly grateful for the man that I have found because, like, we're right on track with each other. Like, it took some work. We didn't meet each other there. Like, when I met my husband, he was 30, he was an academic, had never had a job, didn't have two pennies to like put together, and had a terrible credit score. Okay. And I was like, this is outrageous. We have to clean up shop. Like, we got to fix this right now. And like, I was like, I'm going to get a credit card in your name and I'm going to back pay it until your credit score goes up. Cause I had a good job at the time. Right. And so I took care of us for the first 2 years while he was finishing his PhD. And then he was like, you took care of me, like it's my turn to repay you, quit your job. And he's been taking care of us ever since. And that is what, I think what it really means to have like a strong relationship financially. Cause like you have to be each other's team player. The only reason I'm able to do this is because he's taken the hit this time. Like he's taken one for the team. And this poor man is working a 9 to 5 and doing Chachi. Is like he was working like 8 days a week when we first started, and so I've got to give him a lot of credit because he's really the only reason that it's not the only, but he's one of the
Wow.
major reasons, right, that like we've gotten this far.
Well said. And that's incredible. Reese, I'm curious, with this whole business venture, I would argue, starting your business, like not only is it difficult, but it's also super risky. So like, I'm curious to learn more about how you
Mhm.
deal with like maybe the risk management side of things. And
Mhm.
I'm guessing it comes down to, budgeting, setting an emergency fund and, having your financial house in order before you actually make the jump into more of the
Mhm.
risky side of entrepreneurship.
Mhm.
But I'm curious just to get more insight around maybe what you would tell your past self to be better
Yeah.
prepared to make the jump into business and how
Yep.
you deal with the volatility of running your own business.
Yeah. Um, okay. So yes, like making sure I have my safety nets, my husband's working, we still have medical insurance, etc., all of that as a foundation. Um, but because of my background in innovation, the one thing when I worked with a lot of corporations are terrified of innovation. They're terrified of change. They want to keep their bureaucracy, their institution, their committees, like they want to keep it in line.
Mm-hmm.
Why I had to leave corporate America. But the big thing around innovation in the way that we would sell it is this is a process of de-risking your investment. So we're not ever throwing $1 million at something, guys. It's the same way I dipped my toe into Wealthfront. We're going to craft a little experiment for $500, $2,000. Let's see what happens there, right? Oh, that went well. Okay, let's do another one. A little bit bigger audience this time. Is there interest in this product? What about this product is interesting, right? Like, is the behavior there? So like there's a million ways you can cut it up around willingness to pay, the product itself, right? Like the channels to meet your customers in, etc. So all of that was already pretty well instilled in me by the time I got to Chachi's. So because I had all my financial investments and everything as my safety nets, that's how I actually approached running my business. I didn't go and like there was a moment where I was about to buy a building and a business that was over $2 million. And I was like, you know what? It's my first business. Interest rates are at like 8%. This is crazy. Absolutely not. And I backed out of that deal. I never like I was like, I cannot sign this paper. I've got to go. And I went the polar opposite direction. And I started with a sandwich station inside of a market. Like my rent is low. The investment in the equipment I made is low. And you know what? Because the plan for us is to franchise. This is just the start. But what we've been able to prove out actually here is that you don't need a lot of money to start a business. We have a 40 square foot space and we're making good money. And so when I approach franchisees, that actually opens the door for almost anyone to come in and join me because a lot of other franchises have a starting cap of $50,000 to $250,000 just to buy into the brand. And then you need your like space and equipment, et cetera, everything. So like I've taken a very particular innovative approach in the way that I've started this business. Anytime we're introducing a new product, it's a test. I'm not putting anything on the menu until I see how it does. Let's put minimal money in it, see how it performs, right? Let's do this one event, see how it goes. That's it. And then we keep testing that. Oh, that one piece of it worked really well. Great. Let's double down on that next time and try something a little bit different. So like I would say like think about your business in a way where you are de-risking every element that makes you nervous along the way. And do that over and over and over again until you've got a product and a business model that works. That's what we're doing, really. It's sandwiches, but that's the thought behind it.
No, that's incredible. And it really highlights the strategy that goes into this. It's not like you just, woke up one day, you're like, hey, I want to open up a sandwich shop and then just kind of went on your way and opened it up and then just kind of hoped for the best. It's like, no,
Right.
you're taking the time to dig into the key insights that actually unlock the potential to grow this business in an exponential way. Like you're talking with the customers, you're paying attention to the data, you're constantly trying out little things here and there and seeing what clicks and then doubling down on what clicks. Like that right there that's strategy, right? And I
Yeah.
think it's really what separates probably what I would guess the good business owners from the ones that fail. It's the people who are
Yeah.
more intentional with what they're doing, which it's great. First off, thank you, Reece, for sharing all of this, coming on the podcast and being willing to be open about your business experience as well. Because I would also argue it's pretty similar to the stock market in general, where a lot of times the reason people get burned is because they just kind of hop in the market. Maybe they see a stock that's like going up 100%. They're like, oh yeah, this one looks good. Like I'm gonna throw all my money into it, and then inevitably one of the market cycles is going to occur where the market's going to go red or we're going to have a crash, and then they're left kind of holding this asset that they bought. And the only reason they bought it was because it was going up, and then they panic sell, right? So like it's kind of similar, in a way, this whole mindset could be applied to the stock market, just
Yeah.
easing your way into certain positions, trying out different positions, like seeing, if you want a little bit of international exposure, or maybe you want some emerging markets, you can start small, kind of fill it out and see how that fits in your portfolio, fill out
Yeah.
the ebbs and flows, see how it fits to your, risk tolerance as an investor before you just dive in deep and put everything all in on one position. So I think it's really incredible just to kind of hear the key lessons there and also kind of see how it's correlated to the stock market in that sense as well.
Yeah.
you know.
Reese, I know you're not in consultation no more, but you just gave us a free consultation for us and all the listeners on basically some of the things that could help them if they're looking to start a business or if they already have a business. So thank you for
Yeah.
that added bonus.
Of course. I love talking about this stuff, guys. Thank you for having me on this. And if anybody wants to chat about it more, feel free to reach out. Like honestly, I love this community and I just love chatting about it as much as we can.
I have one
Absolutely.
quick question,
Yeah.
and I see an amazing library behind you. Those that are listening and not
Yes.
watching this, she has an incredible library of books right behind her. So I'm curious to know, what role has books played in your life?
Ooh. That's a really good question. Um, I think I was someone who really liked autobiographies a lot. You can see the Che book. I had an obsession with Che Guevara for a very long time and like did my dissertation research and my master's in Cuba. Like it took me for a long journey. Um, Books have played a pretty significant role in my life. I think from a perspective of just like wanting to escape. It's like diving into a movie and sitting and getting into a bit of a flow state, but also just changing my perspective on the world. Like I said, keep like peak cockiness is early 20s, and like that's when I actually dove into a lot of books in college, and it just flipped my understanding of what I thought I understood really 180. I was like, wow, the more I know, the more I realize I know nothing. Like, and so
Yeah.
it's just it's that's constantly the battle, right? Like the more you read, the more you're humbled and you're like, I don't actually know a damn thing. So
Wow,
uh,
that's amazing. I think books are really special and somehow somewhat underrated, especially now, right? Because we have so
yeah,
many other ways of digesting information in a more
yeah.
palatable way, in an easier way, right? We could just, I mean, there's audiobooks, but at the end of the day, the art of actually looking at a physical newspaper or maybe
Yes.
reading a physical book tends to be a little bit less now than before. And I think if we kind of dive a little bit deeper there, books, when you read books, it's like you go into a different dimension, right? It's like it's you and the words and the pages and your imagination. Your brain actually has to think and put imagery to the words and emotions to just what you're seeing. So I mean, maybe I just have a high level fantasy and excitement for books, and I hope that encourages people to read books or just find other ways that they enjoy information, right? What is your favorite book, if you don't mind me asking? It doesn't have to be like
Mm.
financially related or anything at all. Just
Actually, I was gonna say my favorite book right now is The Psychology of Money. And I got it
what?
because you guys talked about it on the podcast, and I was like, what the hell is that? And I tore through this thing. I honestly have to read it again. I read it so fast I can barely remember I barely retained it. But I just thought it was such an incredible book. It is full of good storytelling. And I think honestly, at the end of the day, good storytelling is how people really learn, which is what you guys are doing on this podcast. And this is another example of it. So if you haven't read The Psychology of Money, go get it now. Get it on thrift books, go get it used, whatever, go get it.
It's definitely a classic. And yeah, I mean, I think it does a great job at highlighting the behavior side of finance
Yeah.
and kind of helps put a mirror to your own habits. And you start to question, like, huh, maybe I should, think of money a little bit differently. Or it really helps put things into perspective in a new way, especially when it comes to the touchy subject of money. So yeah, incredible book. Definitely read it if you haven't. We've talked about it quite a bit on this podcast because it's such an impactful book. And I think what it helps most of all is just helping build a new mindset or like a
Yeah,
perspective of how to view money. Because, if
totally.
you come from different family dynamics, whether it's, a family dynamic that has a negative take on money or a positive take on money to the point where it's like, overly optimistic about money, like only chase money, that's all you should go after. It's very easy to get into a trap of viewing money the wrong way rather than just seeing it as a simple tool to kind of get out of life what you really want out of it. So definitely an incredible book to kind of help reshape your mindsets or just understanding of this thing called money.
Yeah,
Reese, I do have one last question myself
sure.
as well. Looking back maybe like the last 10 years, with everything you know now, like your business experience, your stock market investing experience, all
Mhm.
of the financial skills that you've embodied, what would you tell your past self, 10 years ago at this time if you were just to have a conversation with her? Like, is there anything you would tell her based on where she was at around 10 years ago that would probably hopefully light a light bulb into her head to kind of get things moving faster in the right direction?
Yes. Um, Stop waiting for the muse to strike. Like I always knew I wanted to start a business. People that knew me expected me to start a business. And I didn't go down that route for like 10 years. And everybody was like, huh, interesting. Not what I expected from you. And then I started a sandwich shop. Sandwiches are not what I thought I was going to start with. I thought I was going to start some humanitarian nonprofit that worked with children in India or whatever, and I think for me, it was like stop trying to find the perfect fit. Um, the best business to start is one that is presenting its opportunity to you right now. Get in there, just even if you fail fast, fail young, you will recover. It's fine. Don't be so afraid of it. Like we said, I lost like 70K at the beginning of this thing, and I'm doing just fine, guys. It's okay. So I would say like I would tell her like just get in there faster and stop waiting for the perfect idea or opportunity. I'm not, fawning over sandwiches, but it has been a fantastic first business because I have learned so much through it. And so I see it as a way to win big one day, but cash out, but also like as a stepping stone to the passion projects that I really want to be able to dive into eventually. And I wish I would have just started sooner.
Love that. I love that. Well, and right now you're gaining valuable business insights that are going to help
Yeah.
you explore this avenue or go deeper down this path down the road. And like, of course, we all want to just skip ahead to like owning like some massive impactful company,
Right.
but like, baby steps, right? Like we got to take one step in front of the other. We got to start small, start where we are, most importantly, and work
Yes.
from there. So I love that, Reece. One other question, especially for people who might have that desire, maybe they're younger, or maybe they're in their like 20s or 30s, and they have a desire to start their own business.
Mm-hmm.
What would you say is important to have situated on the financial side of things before jumping into the business game based on your understanding of running your own business?
Ooh, that's such an individualized question though, right? Because like I was privileged. There's no scenario where I'm going to be homeless, guys, right? Like I have family who will step in and take me in. That is not the case for everybody. So I think it really sort of depends on like where we kind of started this conversation. Like the same way you invest is the same way you should be thinking about how you want to approach taking a business risk. Like you got to take stock of your own life. Um, because I have the good grace in this world, right? I won the lottery of life where I'm able to take that risk and still be okay, even if it fails. For people that might be a lot younger, I think go to worst case scenario in your mind. Like think about that. Like when I was thinking about buying a $2 million business, I had conversations with my husband about, okay, if we file for bankruptcy, would our marriage survive that? Right? Like if this happens. So I would say like go through that exercise. What is worst case scenario in your mind? More often than not, it's not going to happen. And more often than not, your fear is worse than the actual reality of it, even if it does. And so I would say like have plans around that because the way that you are able to kind of overcome the anxiety that comes with taking a risk is safety nets. The same way I've talked about my investing. The same way, like if you're going out for a job, guys, and you're interviewing, you don't interview at one place, you interview at 10. And then if you get the one that you want, great, but at least you have backups. Like that's how you should be thinking about this is like cast your net far and wide, think about worst case scenario and have 4 backup plans if that worst case scenario happens. That's how I think you should step forward and then take the risk. Go for it. See what happens. More likely than not, you'll recover, even if worst case happens.
Wise words. Wise words. I think we'll leave it at that. Like that's a strong way to end. So thank you for sharing that, Reece.
Thanks,
Uh,
Josh.
Bafi, let's check with our co-host real quick. Do you have any ending or closing thoughts, Bafi, before we completely wrap up the podcast episode?
Just a quick one. I think, to put a little bow on it, one of the biggest things I've kind of learned just listening to Reese and her story and the various things and progress she's made in life, which is amazing. And being a mom is just like insane too. It's like, wow, like that's crazy. She's doing it all. They're doing it all. I've learned that however you start in life, wherever you are, look to gain something you can take with you, right? If you're a consultant like Reece was, what can you take with you when you leave, right? Is it the network? Is it the knowledge? Is it the skills, the resources, right? The things you gather. What can you take with you to continue to live a more fulfilling life and provide more value to yourself, your family, to others, and so forth? If you are working in finance, okay, what skills are you learning that you can take with you? If you're a student, what can you take with you, right? If you're learning to invest, what education things and what can you take with you to improve and maximize and compound your life in the areas that matters most to you and how you want to show up for others, right? And then lastly, really just look to maximize whatever your situation is, right? Take all of that in and maximize it and get as much as you can get out of it, because that's how you get incredible stories like this.
Well said, Buffy. I just have one quick question for you, Reese. Coming from
Yeah.
your background and the ups and downs, what taught you more, your failures or your successes?
Ooh. Actually, I think my successes. I know it's popular to say your failures, but I learned a lot in my innovation career and I was good at it and I was consistently moving up the ladder. And I think that's where I honestly learned the most. Like my successes were entrenched in, I think, some of my personality traits where I'm just naturally outgoing, people will chat with me kind of thing. And so that presented a lot of opportunities to me, and I was in the right environment for it to feed off of that. And so, yeah, my successes really, I think, have taught me a lot.
That's incredible. And
Yeah.
what I really like about this, Reese, is I think sometimes, especially on social media, we get caught up in the binary, black or white. It's like you either start
Mhm.
a business and you go down the entrepreneur route, or you stay in corporate America your whole life. Like those are the
Mm-mm.
only two routes that are available to you.
Mm-mm.
But like you're proof, you're living proof that you can do both. It doesn't have to be one or the other. You can extract the key lessons and insights and
Yeah.
upskill yourself in the corporate world, which is a great place to learn incredible skills and get paid to do it. And then down the road, you can always take that risk later. It's like I,
Yeah.
I really like the intentionality around your decisions that you made. And of course, it hasn't been all ups. Like you've had your fair shares of downs, but it's great to just kind of highlight that you can always extract valuable skills and lessons, like whatever situation you're currently in. Like there's something that you can learn from it and extract
Yeah.
something from it to benefit you down the road. And kind of piggybacking off of Boffy's point, like a lot of the skills you're learning, like even if you're just working some what you would call simple job, like there's valuable skills that you can kind of tweak or work on, whether it's like your communication skills, whether it's your
Yep.
relationship building skills. Like even if you're an entry level job, like you can practice building relationships or practice your communication skills with your coworkers, and those skills are transferable. Like they're only going to help you if you start your own business down the road, or help you if you're going to get into finance or an investing related job in more of a structured corporate America. Like a
Yep.
lot of the skills are, at least what I've noticed so far in my life, is most of them are a lot more transferable than maybe we give them credit to.
Yeah. I mean, one last thing I'll end with is for anyone that's listening that has spent maybe a few $100,000 on a degree and you feel entrenched in the career you're in, or, how am I ever financially going to be able to do anything else? I have student debt. Like, so much of what I think creates that binary that you're talking about, Josh, is it's entrenched in identity. I went to medical school, therefore I am only a doctor. No, you're not. You're multifaceted. You're several other things. It's okay to put that part of yourself away for a moment, set it down, move this way. Like I had a professor once who prided himself on like reinventing himself every 7 years. Like no matter what he was doing, how successful he was, he would drop it at 7 years and do something else. And that really stuck with me, and I was like, "Hell yeah, okay, he did it, I can do it." Like, I was like, it's okay, I can put this baggage down and go do something else." Like, it's hard, but yeah, you're allowed. You don't have to stay, guys, if you're not happy. You can do other things
I
and make
love
money.
that. Well, and especially with, the internet as our tool, like there's so many incredible resources out there, just
Yeah,
completely free too, like on YouTube,
completely free.
articles, and now that we have AI,
This
you can start to use AI podcasts. Exactly. So it's never been easier to learn different skills, especially I know many people listening to this, like maybe this is their first podcast, their first money related podcast that they've ever listened to. And it's really proof for those people who, if this is your first podcast, that it's never been easier to surround yourself with people or communities that are trying to help one another grow in different skill sets. It's like, of course, the Market Hustle podcast, like we're focused on more of the money side of the equation, but there's probably even hundreds of thousands of podcasts out there that talk around a various different of amounts of skills, like whether it's if you want to get into the medical industry, whether you want to start your own business, like there's so many resources out there. So use them to your advantage, like get more intentional. It's only going to help, build the path that you are more excited about and more passionate about. And really what I like, Reece, is, what you mentioned is it's never too late to change the path that you're on, right? Like it's easy to kind of, I've even found myself in the past, like you kind of silo yourself out. You're like, this is what I went to school for business management. Like I thought I was going to be managing businesses. Like that was going to be my job. Of course I've gone a completely different direction. Now I'm more in the entrepreneurial realm, building out the Market Hustle. And like, that's kind of the hat I'm wearing now. But I think giving yourself permission to pivot or take different directions or sharp turns, if you will, based on where you're at and what opportunities kind of become available to you is such a powerful, I would say, just perspective to have, and helping you take advantage of the opportunities that do come up to you as a person. Because I'll say this, like I've even noticed it with my parents or, family members, where maybe they do have opportunities that present themselves to them, but they just feel like they're not good enough or that they aren't qualified in their own head, although the opportunity is literally staring them in the face to potentially make the jump and try something new. And, I'm still relatively young. Like I'm 29. So like I still have a lot more life to experience, but my guess is that the older you get and the more established you get into what you think you are as a job or the skill set that you have, like the more you kind of wear that as your identity, it's harder to break out of it. So if you are young, if you're in your 20s and 30s, like get comfortable making those pivots when the opportunity presents themselves, because that's only going to benefit you down the line. And clearly it's benefited Reece, now that she has her own business and she kind of broke out of the corporate world that she wanted to get out of, and she's thriving. So I love this. This is such an incredible podcast. Reece, do you have any like last words to the Market Hustle community? Like any last comment that you would like to end the podcast on?
Honestly, I think since this is an investment podcast, the advice I want to give you is move the money into the investment account, move it into the high yield savings account. They are real accounts. Don't be afraid if it's not Chase or Bank of America or whatever. Put it in there, let it do its thing. You'll make money while you sleep. Just let money work for you. It's real.
We'll end it at that. Well said. Thank you again, Reece, for coming on. Pearson Boffey, thank you for coming on as co-host to another great episode. Market Hustle Community, episode 38 is officially wrapped up. Do me a quick favor, though. If you have a few minutes, go ahead and leave a 5-star review on whatever podcast platform you're listening to, and leave a quick comment, kind of what you gathered out of this episode. It's really nice to kind of hear the thoughts of everybody listening. So that's a wrap. Thank you again for listening, and have a great rest of your night. Bye-bye.
If you feel just like I do, link up, come and join this crew. Hey, I'ma go invest and I'ma watch my money double, take it to another level. With that market hustle, always play it smart. You ain't dealing with a sucker. Take it to another level. With that market hustle, I'ma hustle, hustle. 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 With that market hustle, go.